Morning and welcome. We at Self-Trade are delighted to be sponsoring the ETF Centre this morning. And as you probably see from the programme, there's quite a useful lineup of speakers during the course of the day. And I urge you, if you have interest in ETFs, by all means, do come along to those speaker sessions and hopefully they will provide you with greater insight into the ETF market. Very interesting to see Tom with a large disclaimer at the very beginning of the session today. And I think it's probably indicative of our industry as a whole now, with regulation becoming even more important to ensure that markets are working efficiently, but above all, that investors are protected. And despite my youthful looks, I've actually spent over 25 years in the market and started out on the old stock exchange floor as it was then under the open outcry system. And the industry has moved forward quite significantly. And what I really want to do today is just give you an insight from where we stand at Self-Trade as an execution-only broker in the marketplace around what we think investors are saying about ETFs and how that might apply from your perspective as investors or indeed prospective investors. But to just try and put a little bit more colour on our business, the Self-Trade business is sponsoring the ETF Centre, and Self-Trade itself is owned by a large company called Equiniti. Equiniti you might well have come across if you're an investor. Equiniti Group today is the UK's leading share registrar. We're behind over 60% of the FTSE 100 companies in the UK. We also administer pensions. We pay the armed forces pensions, the NHS trust pensions, so we're quite a diverse group. And our origins for share trading started just over 10 years ago when we recognised that customers who had entries or shares held directly on a company's register required access to the markets. And since then, our business has grown. Our share dealing technology platform actually powers up both ShareView, which is part of Equiniti, and Self-Trade today, as well as a number of other providers in the marketplace. And we acquired Self-Trade in January earlier this year, which was a natural expansion for our business. And we're very proud to be able to have the Self-Trade business as part of Equiniti today, and indeed as we take it forward. And if you've got any questions around Self-Trade, the team are here today. There are a number of the management team here as well, and we'd be delighted to speak to you. But in summary, today we hold and look after the assets of over 18 million shareholders in the UK. We pay about 20% of all the pensions in the UK today, and we administer around about 450,000 customers for share dealing. Today's speakers are selected to try and provide you with greater insight into the exchange-traded fund marketplace. Exchange-traded funds are growing rapidly in the UK, but have been mainly used by the institutions. And if we look to our cousins across the water in the United States, private investors are using ETFs more and more as they find their usefulness in the way to construct portfolios or indeed gain access to markets. So hopefully with the lineup of the speakers that we've got here today, providing research information, insight, you should be able to gain a good idea of the role that ETFs can play in the construction of your investment strategies. But where have ETFs come from? Well, the first ETFs were launched out in 2000 through Barclays Global Investors. They had the credit of developing the first ETF in the UK market to track the FTSE. And I've already received a number of questions this morning from prospective investors saying, well, what is an ETF? Well, the easiest way to describe an ETF is that it is a fund representing a basket of shares underneath that seek to replicate either a sector or a market index. And therefore, we'll be taking a look later on this morning at how that might feature in the portfolio construction or indeed as a first entry step for many investors who just want to gain easy access to the marketplace. From a self-trade perspective, we're very keen to see ETFs grow in the UK marketplace. We recognise that ETFs are not that accessible. They are, in many cases, misunderstood. And actually, if you're seeking to find an ETF on the web, it's not that easy. I searched for one the other day, and it took me at least 5 attempts to find what it was that I was actually looking for. And therefore, from a self-trade perspective, we're keen to be working with the industry to ensure that access to ETFs is made much easier and simpler for retail investors of whom we represent their interests. You will also see that some ETFs are more complex than others. And hopefully the speakers today will be able to shed some light as to what that means and why they are as they are. Institutions have been using ETFs for many years. And I looked at an example in The Economist this week whereby the amount of ETF exposure being used by the institutions just simply to gain access to tracking the index or a sector has increased significantly. But we believe that the naming conventions to find an ETF are difficult to understand, and we therefore think it's very important for the providers of the ETFs in the UK to stand up and make it easier for retail investors to understand what it is that they are purchasing. And we will certainly be working very hard on your behalf with the industry to see that come about. It's also interesting to note the sheer scale of choice out there. There are over 5,000 ETFs, exchange-traded funds. But we also see things like ETNs, exchange-traded notes, and ETCs, exchange-traded contracts. They're all a variable on a theme. And once again, if you're speaking to any of the providers of research and information here today, it's certainly worth asking them to help navigate through the myriad of 5,000 different funds. Access to research is coming to the UK, and it's going to be a lot easier for you as investors to gain access to that research and information. We will see a number of providers of information and access research here today, and it's worth picking up with them. It's also worth asking them about risk, because there is risk associated with ETFs. And you'll see a debate emerging in the marketplace over the coming months between the mutual fund companies and those providers of ETFs as to what constitutes risk and how you assess that risk in the construction of your portfolios or indeed coming through as an investor. I'll leave that slide up there for a moment because the naming conventions really are quite complicated. And if you are familiar with trade tickers, if you are established investors, you know that just putting in those 4 digits or 3 digits can make all the difference in terms of what's coming up. And therefore, we think it's very important to try and make that much easier. At Self-Trade, we've got access now to over 1,500 ETFs. We've tried to do a lot more work in recent months to make access easier to understand and navigate the ETF market. But we will be working hard with the providers of ETFs to just try and make that a little bit easier. And I will unashamedly plug Intune Investor. I see Simon's here today already. It's worth talking to the guys at Intune or indeed listening to their talk later on today to ask them about how to navigate ETFs and how to get research and information through. But for some of the novice investors or starter investors out there, you might well be thinking, well, okay, why go to an ETF? What does it do for me? And I think some of the benefits coming through around ETFs are, first of all, the fact that they are priced continuously. From the opening of the markets through to the close of the markets during the day, ETFs are priced continuously. They will go up and down according to the market and how it is pricing it. That's very different to a mutual fund. Mutual funds typically only price once per day. And therefore, if you're trying to gain access to the market and you're looking to see what the market's doing, Therefore, it becomes much easier if you actually trade at a known price. Many of the market makers out there, or those providers of liquidity in the underlying funds, work from a thing called the yellow strip. If they look at their screens, they will see a yellow strip which is pricing the marketplace. And you will start to see that coming up as you get a quote coming through. If you're a user of the front-end facility of a execution-only stockbroker, you'll get that quote coming through. That is being fed directly through from the market. So it is a continuous valuation. At least you know what price you're buying at or selling at as the market goes through. We're seeing increased liquidity for ETFs. You know that there is buying and selling going on. You've got access to different sectors. If you want to try and get access to the oil sector or the gold sector or whatever area that you might have been researching that you feel that is of particular interest to you, ETFs can play a role in giving you access to that area. And we'll see a little bit later through the slides that I've got here today some of the ways that customers, investors are looking at utilising those ETFs and how their thought process is emerging. They're also very cost effective. We start to see some of the UK FTSE tracking ETFs being charged out at 6 basis points, so much cheaper in comparison to some of the other mutual funds that are out there. And diversification plays a significant role for many investors as they try and spread the risk of not being exposed to just one stock or two stocks. You're actually getting access to a basket of stocks that replicate and show what the market is doing or what a sector is doing. So hopefully during the course of today you'll get more information around how that can work for you. So we're really keen to hear from our investors around their attitudes to ETFs, and we asked them to give us an insight to their thought process. So what I'm about to share with you are some of those thoughts and insights that are coming through from our own investor base. So one of the things we asked is, how aware are you around the take-up of ETFs in the UK? And it was quite surprising for us that we thought probably the more seasoned investors, the older generation, would be more aware. But actually it comes out that it's younger investors today, the sort of 45 years and below, that are using it. But more interestingly, many people came to us and said, we've never heard of ETFs, we don't understand them, we don't see the role that they have to play. And that's very important for us, because if they've never invested in an ETF before, that means that there is a role going forward for ETFs to play in their portfolios. But for those customers that are investing in ETFs, what's prompting them to go into the marketplace? And it would really seem that diversification is key. It's really hard if you're an investor and you've been investing over a period of time to get the diversification in a portfolio right, the balance of risk, reward coming through. And 50% of our investors said diversification is probably the main reason that they look to use ETFs. But interestingly, 39% said it was around trialing a new marketplace. If you want to get involved in the Asian markets, if you see opportunities arising around the world globally, how do you get access to those marketplaces? It's not always easy to get stock research coming through to make those decisions. And therefore, trialling a marketplace through such an instrument as an ETF is often a way of getting first access into that marketplace. Cost is also a big driver, and therefore we see coming through from the information that around about 41% believe that mutual funds are a cheaper way, ETFs are a cheaper way of getting access over and above ETFs. Now, I'd hesitate to say that that is always going to be the case, because actually if you start to add up some of the charges, there are mutual funds pretty much on a par now with the more popular indices with ETFs. You've got a job to do to decide which way you go. If you want to track the UK FTSE All-Share Index, do you go down the route of mutual funds or do you go down the route of ETFs? And there is going to be an emerging competition over the coming years between the mutual fund industry and the ETF industry around how and who is doing the best job at either replicating the returns of an index or indeed who is doing that on the most cost-effective basis. And once again, that's a great opportunity and question to ask a number of the providers and research companies that are here today. Perhaps more interestingly, 43% of our investors were saying they turned to friends and family for recommendation. And that is an emerging story that we are seeing in the marketplace today. Changes in regulation have meant that there are less advisors out there. And many of those advisors, I think there's probably about 24,000 in the UK today, are focusing upon ultra net worth, high net worth individual investors. But for the mass investors, many of you are looking at making your own decisions now. You don't have access to the advisory marketplace. And therefore, we're seeing more and more information being exchanged between friends and family, and guidance being given by members of the friends and family towards information areas on the web. So we find this quite interesting in terms of who you're going to for that information and guidance. But what interests us more is the characteristics of ETFs and how they are appealing to you. We see a real key theme coming through around income generation. With the changes that we have experienced in pensions legislation and the changes around the ability to take an annuity or not take an annuity is more of the case, those investors that are entering a period of seeking to take income are starting to look towards ETFs and how they can generate an income in retirement. And once again, I'd urge you to talk to the research teams that are here today around how some of those income-generating ETFs might play a part in your portfolio. I've already touched upon real-time pricing and the advantage that gives you of buying or selling at an earned price. The fact that you have choice out there, and the fact that you're actually looking at performance, you will get access to the averaging of performance returns from an indices. But low charges certainly seem to be the most appealing element of getting access to ETFs for investors. But the story for us is one of why are investors not using ETFs more. And we think the main reason behind this is just pure awareness and education. You don't see many of the producers of ETFs advertising as extensively as you do the mutual funds in the UK. You don't necessarily see as many education programs being run in the ETF area. And indeed, one of the key things for us is how can we see more education created for investors who are looking to gain access into the ETF marketplace. It's often hard to find the relevant ETF that you're looking for. And ETF providers are not necessarily well known. Some of the big names you will see out there, and they are growing in stature in the UK marketplace. But it really is about creating awareness and creating the debates around ETFs and how they are used that we're interested in seeing develop in the UK marketplace today. So what does the future look like? Well, we think that ETFs are set to play an even bigger role in investor strategies over the coming years. 84% of our respondents said that ETFs will either have the same level or greater prominence in their portfolios going forward. And we think that is quite a significant statement coming through because it would indicate that for some investors it's becoming increasingly difficult to get the right sort of information and access to individual stocks where they have traded historically. It might well indicate that many investors are looking to allocate to ETFs to gain access to an index in their portfolio. And we will watch this development as things move forward in the UK marketplace. So the debate around mutual funds 90% of our respondents said that they think active managers charge too much. What they didn't say is what they would be prepared to pay for active fund management. And active fund managers are there at the end of the day with mutual funds to really provide outperformance of an index. I'm sure many of you in this room will have a view as to whether or not they truly deliver active outperformance, or indeed whether some of those active fund managers are simply tracking a benchmark index. Many investors think that they should have a fixed charge but be rewarded for outperformance, and we have seen some mutual fund managers move into that arena. But generally, the view and consensus is that active fund managers of the mutual funds are outperforming index trackers. And once again, I prompt you to ask that question of the research companies to see whether or not that is the case. Active versus passive. Just how close are the passive fund managers to their index, and what are they doing in terms of the returns, versus the active fund managers that are promoting their ability to outperform and outwin the index over a period of time. There is no easy solution, and indeed in my time in the marketplace I've represented mutual fund companies from both the active side and indeed the passive side. I've seen two sides of this industry and the debate that goes on. But I do believe that with markets as they are today, with the transparency that exists in market information, that it is becoming increasingly difficult to outperform an index. And therefore, allocating to ETFs that track an index, or indeed mutual funds that track an index, there is a core part to be played for those types of investment in a portfolio. So we refer to this as being a revolution. I think from our perspective what we're seeing today is it's more of a silent evolution taking place. The mutual fund industry is a significant force in the UK today, and I do not think that the ETF industry will simply move in overnight and take out the mutual fund industry. But I do think that there is going to be more and more interest expressed in ETFs. There was an article in The Economist this week that was looking over in the States at the use of ETFs by institutions and some of the big institutional pension funds out there. What they're recognising is that actually they're using ETFs more and more because they need to look at their liabilities over time and therefore allocating part of their portfolio to longer-term index tracking. They know that way that they are at least going to return what the indices have done over that period of time. And therefore, I think with the industry in ETFs making life more transparent to prospective investors, making it easier in terms of a naming convention, and for investors like yourselves to find those ETFs in the marketplace, we will see the area grow. And hopefully, today's speakers and today's programme of events will help shed some more light on how ETFs can work for you and whether indeed they might be right for you. And Self-Trade will be campaigning to ensure that investors get more transparency and greater education around ETF. From the point of view of Self-Trade and ETFs, we're committed to working with that industry. We want to see the suppliers create more transparency around ETFs. And indeed, if you want to see how you can get access to ETFs, go visit us today at stand 14 in the main area, and we'll be able to provide you with more information. The team's there. We're linked through our web system here this morning to be able to guide you through some of the research and material that we've got. And indeed, from our perspective, we are just launching out on Tuesday with a trading fee of £9.99 to buy and sell ETFs through our Self-Trade channel. I'm also delighted to say that we launched our new trading app, which is available on Apple, and that went live as well a few weeks back. We've just updated it, and a new release has just taken place in the iStore overnight. So if you are an Apple user, do feel free to go there and download and use the application. And indeed, if you want a demonstration of it, stand 14 today, we are there demonstrating the app. From my perspective, I hope that you get a lot out of today. It's a great lineup of speakers that we have here at the ETF Centre. I'm hoping that you're going to have the opportunity to see some of those speakers around the exhibition during the course of the day. Do stop them, go to their stands, ask them plenty of questions. They're delighted to be here. We at Self-Trade are working with a number of those providers of information and services to ensure that we can bring you access to the latest information, research and insight on ETFs. And indeed, if you haven't got worn out by the close of the day, we'd love to see you all for a drink on the stand at 4:30 this afternoon, and hopefully we can hear from you directly as to how you've got on at the exhibition today. As ever, I have to also close with a disclaiming statement, very similar to Tom's, insofar as the information that we have gone through today is not necessarily that expressed overall. It's not advice, etc. You can read it for yourselves. But we are, as you can appreciate, heavily regulated in this industry today. And that's something I actually welcome. It's for the good of investors going forward. So without further ado, I say thank you very much for your attention. I will catch you later. We did say we wouldn't do any questions, so I'll catch you later, sir. And I hope that you have a very enjoyable day here at the Stock Market Show. And I will now hand over to Michael, who will tell you all about the London Stock Exchange. So thank you very much for your time and attention.